In this video, we look at the basics of payroll accounting. Did you know that Cosumnes River College offers its own payroll accounting course, Accounting 121? Its sister college, American River College, also offers the entire series of payroll accounting courses, Accounting 131, 132, 133, and 134. I share this information with you for two reasons. First, to encourage interested students to enroll, and second, to let you know that payroll accounting is an entire field in accounting, and we are just reviewing it briefly. Remember when you had your first job and you were so thrilled to receive your first paycheck? You received it, you looked at it, and the amount was far less than you anticipated? Well, as you know, your employer is required to withhold certain amounts from your paycheck. Similar to sales taxes, the employer can't keep those funds. Federal, state, and local laws require them to hand the withheld amounts over to the various governmental agencies. These amounts are referred to as employee payroll deductions. What you may not know is that your employer also pays employer payroll taxes in connection with having you as an employee. They are expenses. These are not amounts withheld from your check, but they're costs to your employer. Therefore, when making the decision to hire a new employee, the cost is far greater than the hourly wage or the salary that's agreed upon, as you will soon see. Gross pay is the amount you actually earn during a pay period. Gross pay is the wage amount that your employer agreed to pay you, the employee. Payroll deductions, commonly called withholdings, are amounts withheld from your gross pay for state and federal income taxes and Social Security taxes, and for voluntary deductions such as health insurance or a retirement plan. Net pay, also called take-home pay, is gross pay less all the deductions. Your gross pay less all withholdings, mandatory and voluntary, is your net pay. This is the amount of cash you can put in the bank. Net pay is typically far less than gross pay. Your employer is not allowed to keep the amounts that are withheld from your paycheck for your mandatory and voluntary deductions. They must send them to the government, insurance company, or other entity within a specified amount of time. You can think of your employer as acting like an agent on your behalf. The employer must record a liability for the amounts it owes on your behalf until it pays the amounts due. The federal Social Security system provides retirement, disability, and medical benefits to qualified workers. Laws require employers to withhold FICA, the Federal Insurance Contribution Act, taxes from employees' wages on each payday to cover the cost of all these benefits. The rate of withholding for FICA taxes and Medicare taxes varies from year to year, but in 2014, the FICA Social Security tax rate was 6.2% on the first $117,000 of gross pay. In addition, the FICA Medicare rate of 1.45% was applied on all of your gross pay in 2014. For those of you who are curious, the 2015 FICA tax rate has increased to 118,500, an increase of more than 1%. You don't need to memorize these rates because they change, as you can see. Please do know how to compute who pays how much given the data sets. Your employer is required to match the amounts withheld for FICA and for Social Security and Medicare on a dollar-for-dollar basis. For every $10 withheld from your paycheck, your employer must also pay $10 on your behalf to the Internal Revenue Service. The amount of income taxes withheld from your gross pay usually depends on how much you earned during the pay period and the number of withholding allowances you claimed on the W-4 form you completed when you first went to work. The IRS provides withholding tables to assist employers with how much to withhold based on earnings, withholding allowances, and marital status. Until they are paid, withholdings are reported as a current liability on the employer's balance sheet. Employers often withhold other amounts from employees' earnings for voluntary programs. The amounts withheld depends upon which plans you choose to participate in at your place of employment and can include amounts for charity, medical premiums, and retirement plan contributions. Your employer makes payments to the proper agencies for the amount you have withheld as voluntary deductions. Again, the employer is simply a conduit for the dollars. It collects from the employee and turns the cash over to the designated agency. As is the case for other amounts withheld, voluntary deductions are reported as a current liability on the employer's balance sheet until they are remitted. Here is an example of a typical payroll entry to record the employee's withholdings and net pay. Assume gross pay of $4,000 was earned in January. Employees will be paid $3,126 in February after deductions. The amount of net pay is credited to accrued salaries payable, or sometimes simply salaries or wages payable. This occurs when the payroll is prepared. Later, when the paychecks are actually written, the journal entry will be to debit or eliminate, zero out accrued salaries payable for 3126 and credit the cash account for the same amount. A similar entry will be made when the deduction liabilities are remitted. We said earlier that employers also incur expenses when agreeing to employ people. Let's take a look. Employers must match the employee contributions for FICA, Social Security, and Medicare taxes. In addition to that, employers must pay federal and state unemployment taxes. In addition to matching your contributions for FICA, Social Security, and Medicare, your employer must pay all federal and state unemployment taxes. In California, the employer pays all unemployment taxes. However, in some states, employees are also required to make state unemployment contributions. The federal and state unemployment tax rates are subject to change. In 2014, the federal rate results in a net rate used for most FICA calculations of 0.6%, that's 0.006. The state portion of the rate is typically 5.4% on the first $7,000 of earnings by each employee. The state amount is based on a merit rating that reflects a company's stability or instability in employing workers. You do not need to memorize these rates. Here is a typical entry to record the payroll tax expenses paid by employers. Notice that we debit payroll tax expense for the total amount involved. We record credits to current liabilities for the FICA, Social Security, and Medicare taxes payable, and for the federal and state unemployment taxes payable. Notice that the total FICA amounts are equal to what was withheld from the employee pay. Take a moment to go back a few slides and review the entries made previously to record payroll expenses and deductions withheld from employee paychecks. Usually within a month, the employer must remit payment to pay off the liabilities they've recorded for net pay, payroll deductions withheld, and employer taxes. Here we show the two entries required, assuming net pay of $3,126 is paid to the employees on February 10th, and that all payroll taxes and voluntary withholdings are remitted to the appropriate third parties on February 15th. Notice that the FICA taxes paid include both employee and employer liabilities added together. Break time.